Good morning. This is the Pirate Trader Morning Show. This is Paul in Houston, looking at what we have to look forward on August 20th, Tuesday. Going to Forex Factory. I would say we've got a few speakers speaking, might move markets for a minute. Mainly, though, we've got FOMC minutes tomorrow without a um, without a press report or any kind of speech from Chairman Powell, because he will be in Jackson Hole on Thursday and Friday doing, meeting with the symposiums there. His speech will actually be on Friday, first thing. Well, at some point during the day. Well, it says first thing, so 9. That's 10 o'clock, and that may be 10 o'clock. It's probably 10 o'clock Eastern. I wouldn't think it would be 10 o'clock Mountain. So that's what the rest of the week is going to look like, but that means today is going to be less active than the rest of the week. At least that's my opinion. Looking at the markets overnight, the futures are basically flat, almost entirely flat, I would say. Gold and silver seem to be moving a bit, but ES and NQ, DM, those guys are definitely flat. If we look into Europe, those guys also quiet. FTSE's down about 1%, but generally overall quiet. Asia is moving, and I was looking at the Nikkei, and it's actually bounding a bit. Keeping in mind that it took a big dip on August 5th, seems to about return, or it's returning to its levels at 39,000. So it's 38,000 now. It seems rational to suspect that it might go on up to 39 in the next week or so. So at least that's a thought. So other than that, I will show you crypto, but goodness gracious, I don't know anything about crypto. Bitcoin is up a bit. Ethereum, yeah, they all seem to be up a bit. Moving right along. Looking at Deutsche World. I mean, the things that Deutsche World thinks about most out of Germany is going to be really the Russian war and what's going on with there. Although I was happy to read that the monkeypox is not the new COVID. So it's unlikely to have us back in a COVID style mess as we were with COVID itself because of monkeypox. And I mean, the Israeli Hamas thing continues. There's nothing particularly different about that situation. Moving over to Al Jazeera, also, it's about the same stories. And the reason that I try to go to these different places, to go to Al Jazeera and Deutsche World, as well as the US news, is because a lot of times these guys will have a different opinion, or they'll have stories about events going on that the US press is not picking up, which I find interesting. But such is not the case today, at least not in Al Jazeera. So when I look at Reuters, their market wrap for what's coming up is basically also a muted open. I think Charles will come on and say that the markets will most likely go up if they can go above their overnight highs. That's Charles speak. So, and I just don't see a lot in it, just in terms of where anything that's moving the markets. I mean, it is earnings season, so somebody could come through with blockbuster earnings or a big fail that would move the markets a little bit, but I don't think we're facing that at the moment. And with that, I'm sure Charles will come on and tell me what's really going on if you're there. Good
Yeah,
morning,
I mean,
Charles.
I mean, market going up if we get above the overnight high.
How about that? I've been listening to you. See, I got that part.
Oh, that's so funny. Although it is technically true for today. I am going to say that
Ah,
today.
see, there you go.
That's great. So you don't know anything about Bitcoin, Paul?
No, thank you.
Can I bring you on board? Can I get you on the crypto train?
Oh, no, thank you. No, no. I lived overseas for a lot of years, and had to live off exchange rates, had my dollars and I needed to buy whatever Deutsche Marks or French francs or Russian rubles. And these exchange rates, man, I just never understood them.
Yeah.
And like to think I understand some things, but I do not understand currencies. And crypto all the more so.
See, that's the
So
thing. That's the thing, Paul. That's what crypto is for. So you could avoid those exchange rates, right? And also wiring money, right? I'm sure when you had to wire money back to your family in America, you'd have to pay these insane fees. You can send Bitcoin practically for free, my friend. So anyway, we'll get you on board.
selling me on Bitcoin. Okay,
We'll get you there.
To be continued, yes.
Yeah. All right, let's jump into charts real quick here just to get some perspective on what's going on. Paul already talked about the fact that this is probably going to be kind of a weird, slow week. We've got the FOMC releasing their minutes tomorrow. Powell isn't speaking. So those tend to be kind of more muted days. You can still kind of get a volatile move right out of those minutes being dropped, but generally not any, crazy follow through. And then we got Jackson Hole Thursday and Friday. So this is one of those weeks where bigger players are going to kind of step aside. They're going to wait till they have some more information before they're really making larger bets. So I don't think we're going to have too crazy of a week, but let's dive into the charts. Okay. Just move Paul over here and get rid of that. Okay. So first things first, we'll take a look at the ES like we always do. Anyone that follows the Pirate Traders Brigade knows that we've been talking about a mechanism that has been at play all last week and is still at play to this very day. And that is what we call a slow melt to the upside. Essentially, on a longer time frame, on a daily time frame, the market has momentum. It continues to make higher highs. It continues to make higher lows, which means it will likely do that again the next day. And if it makes a higher high the next day and a higher low, it'll do it again the next day, and so on and so forth. They can be very frustrating intraday because of the slow part of the slow melt, which is that the market is basically mostly going sideways throughout the day while kind of working its way higher. Well, when the market is in one of these phases where it is just a slow melt to the upside, all we can do as traders is wait for a signal that the momentum is over, right? Wait for a signal that the market is done going up. And until we get that signal, we should assume it's going to keep going up. Well, yesterday, we ended the day with what we call a spike up on the ES. Okay? That is a move higher that happened in the last hour of the day, and the market closed in that move. That is bullish to see. So at the end of the day yesterday, the market told us the slow melt isn't over. Okay? We still have momentum. The overnight just traded in a sideways range, the way it has almost every single night for the last week straight, at the highs. The overnight made higher highs and higher lows again. So as of right now, every signal is telling me the market still has momentum to the upside. It's going to continue going higher. Okay, that this slow melt isn't over. So what would be the signs that would tell me I'm wrong? Well, first things first, this morning, the base of the spike up, where that move at the last hour of the day started at 56.22, that's the first area the buyers need to defend. If we poke down there and we find support, it's bullish, especially if we get above the overnight high and we get new buyers there. It's especially bullish. But yeah, it's defending the base of that spike is a sign that the momentum is just going to keep going. If they can't, so if the market pulls down below the base of that spike and gets new selling, they got to start coming back for some of these weak references from yesterday, and we'll take them one at a time. First week reference could reverse the market, if not the second, if not the third. And if none of those reverse the market, we should get support at 53.93. So in my mind this morning, there's no reason to be bearish whatsoever as long as we're above 55.93. That is a single print we left behind from yesterday, which is a great spot for the market to find support. It is also repairing the last week reference from yesterday, which is a great place for the market to find support. So the market pulling back down into yesterday's range wouldn't be bearish. It would just be a dip for buyers to buy. And only if we got below there would I start to get bearish for continuation lower. Okay. The final signal that the momentum, that the slow melt to the upside is over would be when the market makes a lower high, a lower low. I mean, so if we can get below yesterday's low, then we know for sure the market's ready to roll over, on a longer time frame. Now, I wanted to just zoom out and show you guys the daily candlesticks real quick to get some perspective. Earlier on in this move to the upside, I was actually much more anticipating a pullback. The further that this thing goes, the less I'm anticipating a pullback. Okay, because they call this climbing a wall of worry, right? The whole way up, everyone is so sure that the market needs a pullback and that it's going to get a big dip that they're shorting and shorting and shorting. And then every time they don't get that dip, it forces them out of their trades. They become new buyers. Then you get chasing and the market just keeps going higher. When we've seen these kind of what we call V-shaped recoveries in the past, the market often doesn't have to dip back down for them. So here is one here where the market made this V-shaped recovery, okay? Never came back down for it, right? Here's another one right here, one of these V-shaped recoveries. This one just kept going until it got all the way back up to the previous highs. And then what did it do? Consolidated and kept going again. Never came back down for that V-shaped low. Okay, there's another one here. Let me zoom in a bit. This one actually looks a lot more similar to this one to me. Look at that move to the upside. Came all the way back up to all-time highs. Only got a dip when those all-time highs didn't hold the back test for support. Then you got a little bit of a dip. And then the market kept going. So anyone that's telling themselves we need to come back down for these lows, we've gone so far up, we don't need to anymore. Okay, we've squeezed so many sellers, bringing in so many new buyers that we can just go straight back up to the all-time high, spend some time consolidating up there. No reason we have to come back down. Okay, so the longer that this momentum continues, the less likely we're going to get some sort of crazy pullback. Now, I say that to give context to what I'm about to say, which is I think this market needs a liquidation. Now, not a liquidation back down into the lows, but some kind of a liquidation to repair some of the weakness that we've created on the way up. But if I don't get it, I'll be okay with that, right? If I keep waiting for the market to roll over and I finally get a lower low on the daily and we don't get some big liquidation, I'll immediately jump right back on the bull train. Okay, that's basically the idea. So as long as we're making higher lows each day, we should assume there's no reason to be bearish at all. Whenever we do make a lower low on the daily, we should anticipate a liquidation. But if we don't get it, jump right back on that bull train and assume the market's going to keep going. Okay. Overall, I assume this week is going to be a slow sideways week, but right now that spike up at the end of the day yesterday is telling me we still have momentum. We can keep going. Okay. So if I had to, if you put a gun to my head and made me choose what kind of day will we get today, my first guess would be the market trying to go higher, trying to get above the overnight high. If it finds support, bullish for continuation higher. If not, if it looks above and fails, sideways inside yesterday's range. My second idea would be just straight up sideways inside yesterday's range. My third and least likely scenario is breaking below 93 and then testing yesterday's low. Absolutely still possible, but least likely in my mind. Okay. Generally speaking, if they wanted to do that, they wouldn't have ended the day with a spike up yesterday. So that is the ES. So we asked if there's any charts you guys want to look at. It looks like Tesla is the first chart that popped up on the list. Let's take a quick look.
Just before you go, Charles, on the ES, I would think about it, a put spread down below that level, keeping in mind that if the liquidation takes off, I'd want to get out of the way. Mm-hmm. But buying a put spread or rather selling a put spread down there seems like it wouldn't be a dreadful risk.
Yeah, you're
I'd have
saying
to
once
price
the
it out.
market starts to liquidate.
Yeah.
Yeah. No, I
Well,
agree.
it depends on whether you sell it now for time value or you buy it if the market starts to liquidate.
Um,
So, because it'd be buying the upper price and selling the lower price on the put spread.
Oh, I see what you're
You know,
saying.
see my
Yeah.
price?
Okay. Yeah. For
Yeah.
sure. No, yeah, no doubt. I mean, there's a million different ways to play it, but the idea
Yep.
in my mind is simply the market is set up for this liquidation. It's set up for this move lower. But I think however it liquidates, however far it goes, buyers are going to step in and we're going to be right back up to the highs. So if you want to try to make money on that way down on that liquidation, it may last 2 or 3 days. There's definitely going to be opportunities to make money on the way down, but the real opportunity will likely be once the market makes its low and comes right back up. I think all-time highs are in play once again. So yeah, selling puts down there wouldn't be a bad idea either because those guys will get squeezed. Okay, let me jump back into the chart. So we're looking at Tesla here. Let me turn off this simple moving average. Man, Tesla, the volatile of all volatiles, right? Yeah, I mean, Tesla's looking pretty bullish here. I think, obviously it's going to relate to the larger market as a whole, but I would say to the upside, testing 233.50 is a good target. I imagine there's sellers waiting in there, right? This was a low that then became resistance. So it was support that became resistance. That's two-sided trade. So whenever the market gets to a level where two-sided trade has happened before, that is likely where two-sided trade will happen again. So if there are longs in the market from the lows that are shorter-term players, where are they going to be looking to take profits? Likely right up there around 233. So I would be looking for some resistance in there. If it gets through that, another big move up towards the highs in here. So you're talking 250 to 260 area. That's a big move that the market can get. That would be short covering. That would be the sellers that are waiting to short in here. If they don't smack the market back down, they're all going to get squeezed. So I would say intraday today, as long as the NQ continues higher, look for Tesla to continue the momentum as well. Next up, we've got crude. Let's take a look at the crude. Okay. Crude pushing into support. Yeah, so the way I would look at crude, it's got momentum to the downside right now. Okay, in the way that the ES is one time framing higher, the crude was balancing in here. It broke lower. It is now one time framing lower for these 3 days. Okay, now it has reached an area right here around 72.80 where the market has been previously finding support. And because of the look of the candle so far this morning, it looks like we're getting support in there. So to me, I wouldn't want to day trade crude right now. I would either be looking to short in here, okay, right around 75.20 when the market gets up there, if I'm seeing resistance, or I'd be waiting to make a higher high on the daily. If the daily candle gets above the previous daily candle, then you have good support and you can expect some follow through, right? But for now, this is kind of a in the middle, I don't want to diddle zone. So yeah, I'd say either look for resistance at 75 or look for a break of 75.75 and buy, when the market gets above the previous high, buy support.
Cool.
On the crude. Do you want to jump in, Paul?
No, I don't know if you ever compare the Brent against the WTI, but that's probably for another day.
Yeah, that's for another day. I tend to, when it comes to everything, I tend to just trade the chart, whatever it is, rather than comparing it to another chart. just because that's not my expertise. All right. What else we got on the list here? Starbucks. I haven't looked at Starbucks in a long time.
There it is.
Oh, man. Look at that gap. Look at that gap. Was that the CEO gap? Was that the new CEO?
Presume so, yeah.
All right. Well, that's a gambler's chart right there. Gap and balance. So pretty much this could be about to become a balance area right here. The market could be looking to go sideways, maybe even for weeks in this range up here while it digests the new information. So longing down here near the lows, I would say pretty much almost where they're opening today. Probably longing around 90, 95-ish could be a great trade, but it is a complete gamble because whenever you leave this large of a gap behind, the market will almost always try to get back in there and fill the gap. Now, whether it can or not is another question entirely. But if you just look at this gap down right here, you know, if you got shorted as you came back to those levels, you would have got a little bounce, but then the market came back to try to fill that gap. Okay, so the same thing could happen to the upside. You might get a little bounce here, but the market is very likely to try to come back and fill that gap. So I would say if you're a day trader, you could be looking for longs, you know, somewhere around the lows of that gap up day. Or you could be looking for a break of that low to short for the gap fill. Otherwise, you might give it a few days to kind of balance this off and figure out what it's doing if you're more of a swing trader. All right. What about pawn? That's not the right one. NW. There we go. Yeah, Palo Alto. This is one I own in my IRA. I think it's a great long-term investment. Basically, infrastructure and security for the internet. Yeah, my dudes. That's at a very critical breaking point right now. So you had previous balance up here in this range between 335 and 345. So up in that area right there. The market tried to break higher, couldn't hold it, came back through. Then it became resistance again, tried to break through and couldn't. Got a big old dip to give those longer term investors a chance to buy in. So now we are poking and poking and poking at this resistance. And if they can break through, they'll likely head right back up to those all-time highs. So I would say this is an excellent place to watch this chart. Right here at 345.77, quite simply, bullish above, bearish below. So looking for more consolidation in this range if they can't get above there and stay above there. But if they can, you're looking for a big move back up towards the all-time highs. Good catch on whoever brought that up. Alyssa. Interesting chart for a swing trade. All right, let's do one more. Dun, 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 dun. No more requests. Okay, well then just one final look at NQ. Obviously, NQ is moving, step in step with the ES. So the story is pretty much the same. We're climbing that wall of worry to the upside. It has become a massive V-shaped recovery. No reason we have to come back for the lows at this point, but it is set up for some kind of liquidation whenever we make a lower low on the daily. So just same exact story. Assume a slow melt to the upside until you get a lower low on the daily and then look for a larger pullback. As far as specific levels for the Q this morning, yeah, support at 17,747. If that doesn't hold, or sorry, 19,747, 19,726. And if that doesn't hold, 19,705. Okay. Those are your levels for support if the momentum is going to continue to the upside. Any last words from you, Paul, before we say goodbye?
I have a joke. Joke.
Oh, hit me with it. I love a good joke.
So why did the tomato blush?
Why did the tomato blush? I don't know why.
Because it saw the salad dressing.
Okay, solid. I'll take it. All right, guys. Thank you so much, and we will see you tomorrow morning. Have a great day.
All right, guys. Have a good day.